All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, everyone, so Bitcoin decided to continue to dump throughout the weekend. We kind of had some sideways chop. We had a small range, looked like more of a corrective range, and it still does look pretty corrective to me in this area here. But Bitcoin is getting above our key pitchfork midline that we did lose on Friday. You can see over the whole weekend, we kind of just chopped down below that pitchfork midline, and we are getting a bit of a kind of corrective move up this descending channel or ascending channel that we are seeing here in a corrective move up. But I do want to warn we could see another low come in on Bitcoin coming down. And the reason why I do think about that, first of all, let's go into this kind of range that we've been seeing on Bitcoin. So if we pull all this upper price action as a range, you can see that the low that we made on Friday was at the point of control of that range. Bouncing from the point of control, I do believe there was a naked daily point of control is there as well there. Let's go ahead and turn that. Let me switch it to daily. Okay, let this load up. Okay, no, there was not a naked daily point of control. I think that was on Ethereum then. Anyways, we did bounce from our range point of control down here, and we are getting a push up right now. We are breaking above that pitchfork midline, and we are seeing a bit of some volume come in on this last little push up. We are seeing an increase in volume here, which is a little bit looking good here. We do see money flow rising to the upside, both on Market Cipher and on NAMI here. And we didn't really have too much bull divs on the bottom down at the lows. Let's go ahead and zoom in onto the 15-minute chart. And you can see as we were coming down to that point of control there on Friday, yeah, I guess no real bull divs coming in on the 15-minute chart, but money flow was starting to come up as we bottomed out. And over the weekend, we kind of just saw that low volume range that we often see on weekends. And we are the key thing though is over the weekend we tested this pitchfork midline many times. If we zoom out onto like the 2 hour chart, you can see that we couldn't really sustain above that pitchfork midline, and now we are breaking above it with a bit of an increase in volume here. But I would like to warn that this dump on Bitcoin could not be done. And the reason why I say that is based off the Elliott waves and Elliott wave theory here. If we look at this push down that we've seen so far that happened from our new all-time highs, we can look at this as a potential 5 wave impulse down, with this being our wave 1, our wave 2 in your 3 wave corrective movement. And then we're looking for a 3rd wave down, 4th wave correction before one more 5th wave to complete the low, see a bigger correction, and then we would need to see another 5 wave impulse to the downside to complete a bigger ABC correction to the downside. There is a possibility of this happening because if we zoom out on the daily time frame, we have not had a correction from this big daily impulse to the upside from 74K all the way up to 112K. We have not seen that big daily correction come in. Now, we've been talking about over the weekend on Friday, we talked about the bear divs on the daily time frame, the triple drive of bear divs on the daily time frame. And we talked about, if we zoom out onto the weekly time frame, we talked about the triple drive of bear div on the weekly time frame. Hidden bear div printing on the weekly time frame on Bitcoin on NAMI. So there is some signs that we could see that bigger correction come in. So far, Bitcoin is just holding this upper range. And one of the things that I did warn about on Friday was a potential head and shoulders type of pattern, or a topping reversal pattern, model 1 Wyckoff, whatever you want to call it. There is a potential for a bit of a push up and a corrective move before seeing that bigger drop. So it is nice that we are reclaiming this midline. If you're a bull, reclaiming this pitchfork midline is a good thing, and we are continuing to push up now as we speak. But if we're going to look at this as a 5 wave impulse down, being a 1, 2, 3, 4, 5, then what we need to be looking at is where our 4th wave corrective move right now that we could be seeing would potentially end, where we could roll over. So let's go ahead and grab our Fibonacci retracement tool. We're going to go from the highs of 3 to the lows of 3. And you're going to look at your wave 4 targets between the 382 and between the 0.5. So you can see that we are finally now just hitting that 382. Earlier on Monday, earlier today, we did front run that 382. But we are now hitting into that 382 and even breaking a little bit above it. We could come up to around 107K, which we do know that is where our macro range value area high is as well, right around there. Actually, it's around 106K, so we're right around that right now. If we turn on that macro range, yeah, we're coming up to it as we speak here, about 106.5. And we could see Bitcoin continue to reject that macro value area high and continue to roll over. Now, remember, we have started closing daily candles below that macro value area high. So as long as we're below the macro value area high on the daily, there is a potential that Bitcoin could roll over and see a much bigger correction to the downside. If we can reclaim this, we could be in business for a new high to be coming in on Bitcoin. Now, I did talk about this on Friday as well. Closing dailies back within the range is bad, but if you were a bull, if you are bullish on Bitcoin, you do want to see the dump occur over the weekend where there's low volume in the market, where there's not near as many market participants. And we have seen that theme the past few weekends where Bitcoin does dump over the weekend and then starts pumping again, where Bitcoin dumps over the weekend and then starts pumping again. So Bitcoin was dumping and ranging over the weekend, and now we are starting to pump come Monday here. And there is a potential that this is not a 5-wave move to the downside, but rather a 3-wave corrective move that's already done. And we are starting another impulse to the upside. All of this range that happened throughout the weekend and the push up we're seeing right now is part of an impulse. So let's go ahead and look at our trend-based Fibonacci extension. And we did not hit the 1.618. So that is often the common target for a wave 3. If this is going to be an impulse of 1, 2, 3, 4, 5, your most common target you hit is that 1.618. Now, it's not a guarantee that you hit that. You can front run that. And let's go ahead and take on, let me just come here and let's grab that trend-based Fibonacci extension. Let's turn on our ABC targets. So your targets for your ABC correction, your most common targets are between the 1-to-1 and the 1.236. You can see we did pass that 1.236 just a bit here, but overall, it is kind of holding in that corrective zone where we would expect a correction to end and a continuation of the bigger trend to the upside to continue. So I think what's happening with Bitcoin right now is we are starting to finally see some volume come in on this push to the upside, just happening over the last couple hours here. And a rejection from this general area that is coming up right now is going to be a very key area on the charts, where if we do reject from this area, we could expect us to roll over and create another low, maybe even coming down to our range lows at 100.7 and finally taking out those range lows at 100.7K. If we look on our liquidation heat map, let's go to the Model 2 and let's go to the last month of price action. You can see that we still do have the majority of the local liquidity that's below us, and it's around that 100K area, 100, right underneath these range lows here. So there's definitely still a possibility we could come down and grab that liquidity after rejecting from this local resistance coming up on the charts right now. Okay, we do have some resistances above us that have been created over the next couple days. We have a new naked daily point of control that is in perfect confluence with our macro range value area high. We're actually coming up to that right now. And I do have a TP on the long from that area. We will be looking at that area for potential rejection, about 106,500. And let's go ahead and turn on. We do have a new naked monthly point of control. Now, it looks like this naked monthly point of control has been hit right here, but this was the day before. This was Saturday, the 31st. So that naked monthly point of control was not confirmed until the very next day. And since that naked monthly point of control has confirmed, we have not come down to hit it. So it is still a naked monthly point of control around 103.5. And lastly, let's look at those naked weekly points of control starting a new week. Oops, wrong one. Naked weekly point of control. Yeah, we do have a naked weekly and a naked daily up at around 109, 110. New weekly level up at around 109K as well. And then the daily is up there as well. So it looks like we have a lot of resistance that's up above us that Bitcoin is going to have to get through. If we do a Fibonacci pull from our all-time high down to our correction lows, we turn on our golden pocket. You can see our golden pocket is coming in right below that resistance area. So oftentimes we look between the golden pocket and the 786, and you can see this general area in here between like 108 and 110. We do have a lot of different confluence of resistance up in this area where if Bitcoin is going to be able to break above this and we're going to actually see an impulse to the upside, we do have to watch for this area as a rejection. It could at least be a scalp short area where we could look for a bit of a move back down to the pitchfork midline or even a bigger dump to the downside. So let's go ahead and turn off some of these levels now. Okay. And we'll hide that. All right, now I'm going to go on to our Bybit chart where we have our bigger pitchfork that is a little bit more important. And we're going to zoom out. Let's just zoom out onto the 6-hour chart. You can see that we're still quite a ways below that band, that pitchfork band of resistance that we did reject. And if we do start to reject from this local 0.5, right around that macro value area high, we could see a dump all the way down to 97K, which is where our point of control is of that macro range. And it would also be in confluence with our pitchfork midline. So the test that's coming up right now, that Bitcoin's coming up to pretty much as we speak, is going to be an important level. And actually, I just want to see how Market Cipher looks here. Let me turn on that naked daily point of control again. 1065, okay. So we haven't quite hit it yet. It's just above us, 1065. Now, if we look at Market Cipher B, money flow looks really strong on the 12-minute here. Just printed another 12-minute green dot. Let's zoom out to the hourly chart. Hourly chart money flow has now crossed over into the green and is looking pretty healthy here. We do have potential for bear divs on the chart. If we do reject from this naked daily point of control, we would be seeing higher highs on the chart, lower highs on our momentum waves, but that is not confirmed yet. We have not rolled over on this momentum wave. And money flow here, it is starting to roll over. So we do have to be aware and watch out for a potential rejection from this naked daily point of control, which is also our macro range value area high on Coinbase, including all the price action from November to current day. Let's zoom out to the 4-hour chart. 4-hour chart, Bitcoin money flow is coming back up, right about to cross over into the green. If we look at NAMI, NAMI did print some bull divs earlier today on these two lows here. Lower low on the price action, higher low on the momentum waves. NAMI's printing a 4-hour bull div, and that could give us that bit of a push up. It's actually already given us a bit of a push up, potentially up to retest that value area high again. Since we have lost the value area high, you can see here on Thursday, Friday, since we have lost the value area high, we have not really come back up to bearishly backtested yet. So that would be the area. If we are looking at a 5-wave impulse down, not only is it our target to reject from that bearish backtest of the value area high, but it would also confirm re-entry back within the range, and then we would expect Bitcoin to continue to dump to the downside. But let's zoom out on one more time frame and let's look at the daily chart, because this is pretty nice to see if you are a bull on the daily time frame. Bitcoin's momentum wave has bottomed out, and you can see we do have a nice green dot here on Bitcoin. Money flow does look like it is trying to start to curve up again here on the daily time frame on Bitcoin. And we could create another lower high if we reject from the area where we're potentially about to reject from right now. But if Bitcoin can get above this area and hit even the golden pocket at 107.8, 107 to 100, 107.9, I'll say to 108.1, then that would invalidate this as an impulse down, and Bitcoin will probably eventually come up to make new highs. So big test coming up for Bitcoin right now. Are we going to drop further down, or are we going to reclaim? We are already reclaiming our pitchfork midline, which was a key midline that was acting as resistance throughout the weekend. And other than that, yeah, Bitcoin's just still in a range, guys. I mean, I'm looking at this as just one big range here that Bitcoin is forming. It could be a type of topping range, a distribution pattern up here. So we do need to be aware of that. We do still have high time frame bearish signals on the chart. But overall, we were looking for Bitcoin to come up, not to the top of that band, but on our Bybit chart, we were looking for Bitcoin to come up to the top of our pitchfork band, between 115, 116K. And if Bitcoin is going to break that local golden pocket, then we could see that move up. Now, while we're here on the Bitcoin chart or on the Bybit chart, and we're looking at this range that's been pulled, this upper range that I just talked about, if we turn on our golden pocket of the little last move down, you can see this wave, potential wave 3, or if it's a C wave. The golden pocket of the C or 3 is around that value area high of our range. And if I just pull this up to the all-time high, you can see that that golden pocket is coming in right above the value area high of our range. And this is a potential rejection area. Now, we do have internal liquidity there as well. We always need to be aware. You can see this liquidity grab on Thursday right before the more aggressive dump to the downside. So there will be liquidity resting into a golden pocket that if we sweep that liquidity, we could reject from golden pocket value area high around 108.8, 108, 109K. Okay, that is all we're seeing here on Bitcoin. If we go on to our CVD and open interest charts, you can see we're on the 15-minute time frame here. Now, on Friday's live stream, I did talk about this. When we are seeing bullish absorption on the charts, and then we get that big dump in open interest, that is a little bit not what you want to see if you want to see that bullish absorption play out. So let's actually zoom out onto the hourly chart, and let's look at this upper range that we've been talking about on Bitcoin, this upper range in here. And let's just, you can see we are making higher highs on the price action. Our CVD is clearly making lower lows on the CVD. But if you look at our open interest chart now, since that low at 100.7, we were making pretty steady an incline in open interest, showing bullish absorption on the charts. But I started to warn about this on Friday. When you see that steep decrease in open interest after kind of a steady climb to the upside, it does tend to invalidate the bullish CVD absorption. Now, we are still seeing bullish CVD divs, actually pretty extreme bullish CVD divs. And that is the only thing that is making me think that maybe this is a correction and it could be done and we are about to impulse to the upside rather than a bigger 5-wave corrective move to the downside where we do dump. So I would say CVD, bullish CVD divs, and the green dot on the daily time frame with money flow coming up is a bullish signal if you're a bull. If you are a bear, then you are going to be wanting to watch out for that low to come in. And we do not try to be bullish or bears. We just go with what the charts are telling us. And we do have a bit of some mixed signals on the charts here because we have bullish CVD absorption, a green dot on the daily with money flow coming up on the daily. But we also have that triple drive of daily bear div, weekly bear divs on the chart, triple drive of weekly bear divs. And we are back below our macro value area high. So as long as we are below this macro value area high, which happens to be right at this naked daily point of control, there is a possibility that Bitcoin does roll over from this area. I'm actually looking to see if I'm going to add to my short if we reject from that area. So far, what I'm seeing on the charts right now, it is not telling me that we might reject and then just come back to backtest this pitchfork based off money flow. We might see a small rejection, a bounce, reclaiming the pitchfork midline, and then continuation to the upside. Let's actually zoom in on the 5-minute chart. Okay, 5-minute money flow looks pretty good. We are seeing some bear divs, though, on the chart here, in the 5-minute. And it does look like we're rejecting right now a bit. Let's zoom out onto the hourly chart, and let's turn on. Okay, so it looks like we actually just did hit that naked daily point of control. You can see here, it is now marked off, being hit. Don't know why that is showing it like that, but we are. Oh, you know what? That might be an old naked daily point of control. Okay, sorry guys, that is an old naked daily point of control that's already been tapped. I misread that. And let me fix this guy. There we go. It is still our macro value area high though, and that's the most important thing. As long as we're below that macro value area high, if we do reject from a bearish backtest, we also have to remember it's our wave 4 target rejection area. If this is going to be a 5-wave impulse, this is the area of resistance where we would expect to reject. And we are coming up into that area right now. Let's throw that Fibonacci back on the chart. And if we start to lose the 382 now, looks like we're finding resistance right now at that 302. A wick a little bit past it to touch that value area high, but we are starting to reject. So if we do start to roll over here and lose this pitchfork midline, I would be looking for a short, or I guess to add to the short. And if you're just taking a fresh short, though, say you want to scalp this on this rejection, stop would go above that high, and I would be at least targeting new lows. But honestly, I'd be targeting, probably much lower here, down to at least 100.7. Yeah, which is around our pitchfork band of resistance by the time we get down there. And that's a nice risk reward ratio. But even if you're looking at taking out the weekend lows, oftentimes I talk about weekend lows, and I guess this is a Friday low, but it is pretty late Friday. It's a late Friday low. Okay, Sunday's lows were taken out earlier today. Yeah, you can see what did happen earlier today is we did come down. We took out our Sunday lows, SFP of Sunday's lows, nice liquidity grab of weekend lows, and now we're pushing up to come grab weekend highs, and we have now busted above the weekend highs as well. Actually, it looks like we took out both our weekend high and our weekend low today. You can see that was our weekend high, came up, swing failure pattern of weekend high, dropped down, swing failure pattern of weekend low, take out both the weekend lows and high, and now we are continuing this potential corrective move to the upside here. That is about it for Bitcoin. I mean, we're still just ranging. We're not in dire danger yet. I do think if Bitcoin does drop down and take this liquidity of 100.7, it is going to be pretty much confirming that this is an impulse down. And if that's the start of a bigger impulse down, we have our 5 waves, which in an ABC correction, you are looking for a 535. So you'd be looking for your A wave potentially to come down. Your B wave would retrace generally to the golden pockets, the most common area, and then your C wave could come down all the way to 96.5 to the point of control or lower. And we'll just kind of have to see how that plays out over the next few days here. We do not have enough data on the charts to let us know yet. But this area that we're coming up into right now is going to be a big decision point for Bitcoin. If we reject from this area, we could expect us to roll over and create new lows. Okay, now onto Ethereum here. Actually, before we go on to Ethereum, let's check Bitcoin dominance here. Bitcoin dominance, you can see it actually has gotten now. Let me zoom out onto let's just do the 12-hour time frame. Bitcoin dominance has gotten above that golden pocket that we've been talking about over the past, get rid of this, over the past week now. Bitcoin hit into the top of the channel, had a good rejection from the top of the channel overall on the 2-day time frame, held the midline. Now we are pushing up at a potential lower high up to our golden pocket 786 area, where if we do reject from this area, we expect to roll over and make new lows on our Bitcoin dominance. So far, though, Bitcoin couple times now on higher time frames, you can see hit into the golden pocket, saw a small rejection, but overall held a higher low. Hit into the golden pocket again, local liquidity grab of that high, another higher low. I guess that's not a higher low. We did locally, very, very locally, grab the liquidity of last Thursday's lows here, even though this isn't technically a chart where there's liquidity on it. It's more based off dominance, but it does still respect the TA. So you can see we are now above that golden pocket, coming up near our 786 and seeing a bit of a rejection here over the past 12 hours, meaning altcoins are probably running a little bit against Bitcoin today. But this general area here, if we do tend to see that bigger rejection and that rollover, we can expect altcoins to pump against Bitcoin. Okay, that is it for Bitcoin dominance. Let's go on to Ethereum. Before we go on to Ethereum, I would like to say there are a couple partners of the channel. One exchange is BYDFI. They are a non-KYC exchange. You do not need to use a VPN to get into there. All you need is an email and a password. They are offering up to 15% cash back bonus on your initial deposit, up to $1,000 cash back. They are also offering up to $8,100 in futures trading rewards, depending on how much volume you trade. And they are giving discounts on trading fees to any of my users, any of my community that signs up using my affiliate link. You can get up to 17% off discounts on your trading fees for a VIP level 1. That's any amount deposited, just using the link at all. And then depending on how much you deposit, you can get up to more discounts on your trading fees. And then the second sponsor of the channel is MEXC. They are offering that 10% cash back on your initial deposit and up to $20,000 in futures trading bonuses depending on how much you trade. Lastly, we do have NAMI. This is a new indicator that I've been using, and we're going to discuss this in just a second on NAMI. But NAMI is a new indicator I've been using. Just for me, it helps me get in and out of trades, confirmations to know when to enter and exit trades. And link in the description for NAMI is, link is in the description. The 65% off sale they were going ended yesterday, so now it is back to 50% off. It's Divine 50s the code if you guys want to try that out. That link is in the description. It's also a way to help the channel. Okay, back to the TA. So Ethereum is still ranging in its range that we have been in for quite a while now, since May 10th. About 3 weeks now, and you can see here Ethereum did come down to the bottom of the range, but we did not quite touch the value area low of the range, and we also did not grab our liquidity after this impulse up. We saw a very clean 5-wave impulse up here, and we were expecting to dump back within our range, maybe bouncing from the golden pocket. If we go ahead and pull a golden pocket from the lows of that impulse to the highs of that impulse, and we turn on that golden pocket, you can see that golden pocket was coming in right around the pitchfork band, the bottom of the pitchfork band, right in this area here. And we did see a small bounce from hitting the pitchfork band and the golden pocket, but we just retraced up to the value area high. And now that we were back inside our volume profile, we did reject that value area high and then came down and made new lows, breaking below the point of control on Friday. And since Friday, we've been chopping around between the value area low of the range and the point of control of the range. You can see here a couple rejections. Let me fix that. Couple rejections over the weekend of the point of control, but we have not come down to take the liquidity of that impulse, that last impulse up, and we have not touched our value area low. You can see right below that area, I do have a support level marked out that I have been watching and waiting for an alert to go off to get into that trade. A potential swing failure pattern of the lows, because we do have an anchored VWAP here, and we do have the value area low of our range here with a liquidity grab. So that would be an area that I'm still interested in looking for long positions from, about 2456 to about 2463. But right now, Ethereum is holding the lows of the range, and we are breaking not only above the point of control, but you can see here we're breaking above our pitchfork band. We're breaking back with inside the pitchfork band. We did see a small rejection earlier today when we first came up to that pitchfork band. We rejected it, held the point of control overall though, and now we're breaking above it. So this is a strong sign for Ethereum. We were seeing bull divs on the charts here on the way down, and technically not bull divs on the price action here. So I guess NAMI is marking those bull divs, but we just generally want to see lower lows in the price action, higher lows in the momentum waves here. So not a technical bull div, but NAMI is printing that as a bull div. But if we zoom out here, let's zoom out back onto, I believe that was the 12-hour chart. Yes, if we look at our 12-hour chart here, you can see as we've been ranging in this range, anytime we come down to the bottom of the range on NAMI, you see here, hidden bull divs, we get a pump at least up to the top of the range, made a new high. Come down again to the range lows, another hidden bull div signal, get a pump up, make a new high in the range, taking liquidity and finally hitting our big resistance. We dropped again over the weekend, came down to the bottom of the range. We printed another hidden bull div signal, and now we are pushing up. So is there a potential that Ethereum pushes up one more time, finally hitting that weekly level at 28.19 that we've been watching and waiting for a rejection from? It is within our purple box of resistance, and we did reject already from that purple box of resistance, but there is a possibility that we could come up to our weekly. And you can see money flow is coming back up again on the 12-hour, and on NAMI, money flow is in the green. But if we zoom into the 4-hour chart here, you can see that our money flow is crossing over into the green on Market Cipher B on NAMI here. Nice And we were seeing some bull divs as well, not just between these two lows, lower low on the price action, higher low on the momentum waves, bull divs on the 4-hour on market cipher B, bull divs on NAMI as well, with money flow rising here. And we are getting that push to the upside from that. Value area high of the range is coming up very quickly here. Just like Bitcoin, we have some local resistance that's coming up. If we do our Fibonacci poll, I just deleted that because I wanted to make sure it was fresh. We can see that the value area high is a little bit lower than our golden pocket, but our golden pocket is going to be in confluence with the top of our pitchfork band. Now, a few times when we've hit into this pitchfork band, we have rejected. If this is going to be a lower high before making another low and finally coming down to take our range lows down at 23.23, then we could expect to reject from this golden pocket around 26.77. I will be watching for that. If we do have bear divs coming up into this, I will be looking for a short. Right now, if we zoom in on lower time frames on the hourly chart, money flow is nicely crossing into the green here. No bear divs on the chart. Let's go on to the 15-minute chart. 15-minute chart, we are seeing nice money flow on market cipher B and nice money flow crossover on NAMI here, but we are potentially printing, I guess no, yeah, that's not bear divs yet. Okay, so no bear divs on Ethereum. And I think Ethereum is at least going to continue up a bit higher to touch this value area high around 2640. But honestly, 2667 is looking like we could get up there because we are not seeing any bear divs, any bear signals print. Money flow looks pretty good on the 6-minute. Now, 6-minute is showing some bear divs. You can see through here, higher highs on this push up, triple drive of lower drives here. But as long as money flow is continuing to the upside, these lower time frame bear divs will not play out with money flow coming to the upside. On NAMI, on the other hand, we are seeing those same bear divs, but money flow is now coming out. We did get that hidden bull div signal that printed just very, very recently, telling us on this low here, pretty much at market close that happened 45 minutes ago, that we could continue up just a little bit higher. And I do think Ethereum does look like it wants to continue pushing up at least to our value area high. But honestly, I'm going to be looking at that golden pocket above us. Let's zoom back out onto the hourly chart. And overall, we are expecting more upside on Ethereum. If you guys watched my live stream on Friday, we've covered this many times throughout the last couple of weeks. Ethereum does look like it is in that double 1-2 impulse, a 1-2, 1-2, 3, 4, 5, and now we're expecting another range for a bit, a 4, and then another 5. But we did say in this range, we do want to see some time elapse. We want to see at least, 5 to 13 days elapse. Both of these corrections in our wave 1s in our wave 2s, were 13 days long. So we do want to see Ethereum kind of form your wave 4. You want it to be at least as long as those, or very similar in time. And so we could be ranging still. This could be our initial wave 4 still, actually. We did make a new high, though, so I have to lean towards our first. That's the end of our 3, a 4, a 5, and we do need just one more 4, 5. But overall, we expect more upside on Ethereum. If we look at the daily time frame, daily green dot printing, money flow now rising, hidden bull divs on the daily just printed as well on Saturday's lows. So Ethereum is looking like it wants to continue to the upside. If we do reject from this golden pocket, let's zoom back in onto the hourly chart. If we do reject from this golden pocket at 2677, 2667 to 2677, then I will be looking at least to come down to take our range lows, or not our range lows, but our impulse lows from last Sunday. Those are weekend lows that have not been taken out yet. And we do know that weekend lows often get taken out. So not from yesterday, but from last Sunday. And I would even expect us probably to come a bit lower. If we do a trend-based Fibonacci extinction and we go from the highs of this range, the rejection, to our lows that we made this Sunday, and we just bring it up to the golden pocket. Let's just do a theoretical fib pull where we bring it up to the golden pocket. If we reject from there, you can see if we were going to be making a bigger 3-wave correction, then our range lows would be into our target zone of our ABC. We could just do that, grab those lows, and then continue to push up to 3,100. So I will be watching for that on Ethereum. Okay, on to Solana. Solana is seeing a potential impulse to the downside, guys. I did warn about this in my video as well last week in the live stream. We were starting to break the range. This was our upper range that we had been in, kind of the same thing as Ethereum was in. Ethereum has not broken its range to the downside. Solana has been in this range since May 10th as well. Not, May 9th, May 10th as well. But you can see what happened with Solana on Wednesday. We bounced from the value area low, came up for a lower high, and then we started losing the value area low of our range. And we were looking at a potential support to come in at our anchored VWAP because that anchored VWAP has been holding locally as support since we've been above it. If we zoom out onto the daily time frame, you can see that anchored VWAP overall in here was holding as support. But you can see we broke below that anchored VWAP with a volume candle to the downside, with an increased volume imbalance candle to the downside. And to me, that is a bearish sign that we were trying to hold above, and we are now starting to break it down. So why are we bouncing here on Solana? Well, if we zoom out and we look in terms of Elliott waves, we could expect a 5-wave impulse down. And if this is the start of a bigger correction on Solana, if we're seeing an impulse, you want to look from your highs. You get your initial dump down. You have your clear 5-wave impulse down, your clear wave 3 corrective move up. And then in your wave 3, you're expecting a 5-wave impulse down. 1, 2, 3, 4, 5. Okay, so we ended our wave 3. Now, where's the most common area to end? Where's your most common target to end a wave 3? At your 1.618. Well, you can see on Sunday we came down and tapped that 1.618. And right now, even very locally, we're creating that inverse head and shoulders pattern, which is a bottom reversal pattern. But because we've hit the 1.618 on this dump to the downside, it does increase the chances that this is an impulse to the downside that is not finished and that we will come down lower and make new lows below Sunday's lows. So what I want to show you on this is if this is the 1, 2, 3 in your wave 4, you're expecting a move up between the 382 and the 0.5 before rejecting, rolling over, and creating a new low on the charts. Well, you can see the 382, we haven't even quite touched that 382 yet. Let me actually make sure, let me re-pull this and make sure it is perfect. So we'll go from the highs of 3 to the lows of 3. Let's turn on that wave 4 targets. And I would like to show you guys this area that I'm mainly looking at. We still haven't even come up to the 382, but this 0.5 area is going to be crucial for me at $165 because you can see that anchored VWAP, that same anchored VWAP I just showed you on the daily time frame that for the last 2.5 weeks has been acting as support. Now that we have lost it, we can expect to come up to bearishly backtest it, which would also be bearishly backtesting our wave 4 targets, and then we could dump to the downside and we could come to our next anchored VWAP, which is from the lows of the big daily impulse up. So $165. I am long on Solana. I actually did long that 1.618 touch there, just knowing we would get at least some sort of corrective move. But I do plan to fully TP that long position at $165. And if this is the end and we go higher, oh well, I'll re-enter into a new long. But because there is, in an expanded correction to the downside, there is a possibility that you do come down to the 1.618 and you buzz past your most common targets, which is the 1-to-1 to the 1.236. You end your correction at the 1.618, and then you blast off to new highs. So there's a small potential that this is the end of the correction. And one of the things that you could say, we are forming a bottom reversal pattern with that inverse head and shoulders there. I'm expecting a move at least up to $165. If we reject from there, I will be looking for a new low. Look to short that possibly. And if we do bust above it, there's something that we do need to watch for still. If we bust above that 1.618 or that 165 level, let's take that same Fibonacci pull and let's put on our golden pocket. And you can see that our golden pocket is going to be coming in right at the bearish backtest of our value area low, excuse me. So what we would look for is it would invalidate if we do come up to this golden pocket between 168.5 and 169.5-ish. If we do come up there, it would invalidate this whole push down as a 5-wave impulse. Now, that doesn't mean that we're not going to reject from there, though, because it is the bearish backtest of our last 2 weeks range value area low in confluence with a lower high golden pocket. So what we would see if we do come up here, invalidating the impulse down, we would just then look for a higher low to come in on the charts to continue that push up and a bigger impulse. A 1, 2, 3, 4, 5, coming up higher, maybe up to that 194 area where we do have our macro value area high, our macro range value area high. If you guys have been watching my videos at any major time over the last couple weeks, you know that I've been following this macro value area high. It is also, there's a lot of resistance up there in this box. So we have our macro log golden pocket, previous range value area low, a daily level, macro value area high of the range from March of 2024. So it's a very long range. And then we also now have a new naked weekly point of control up there in that area. Okay, so that is about it for Solana. Solana is pumping. We do need to watch for that rejection. I'm just going to turn back the wave for targets. 165 is primarily the area I'm going to be looking for a rejection from. And then we could roll over. Now, our support levels to the downside on Solana. So I guess I'm not quite done with Solana yet. Support levels to the downside on Solana. If we turn on those support boxes, you can see that right below us, we do have that support box where I did say in Friday's video, I expect us, if we start to break this anchored VWAP, to eventually work our way down to this support box. Now, this support box down here, let me just pull that there. This support box down here is the point of control of that same macro range that goes back to March of 2024. We have a weekly level down there, fresh weekly level down there. You can see at 144. We have the anchored VWAP down there from the lows of the impulse, way down here from $96. We do have 2 naked daily points of control in there. Let's see, where's that at? Where are you hiding? There you go. 2 naked daily points of control in there as well. And so I would expect the potential 5-wave impulse would end in this box between 146 and 144. But then once again, guys, if we do confirm this as an impulse down, a 1, 2, 3, 4, 5, we would expect to bounce from this area, but we would only be expecting another lower high to come in on the charts before another impulse down and a bigger 5-wave move, bigger A, B, C down. Okay, that is it for Solana. Now let's go on to SUI. SUI is still chopping. On Friday, I talked about coming down to take out our range lows at 311. Well, guess what happened? We came down, we took out our range lows at 311, saw a nice clean liquidity grab here, and we are pushing to the upside. But what I see on this push to the upside, this looks like a weak push to the upside, low volume corrective move before another push down. If we look at the volume here, turn on the volume and just look at this volume on this push up, it's going lower and lower and lower here. And I do think that we did end the bigger 5-wave impulse up on SUI. Let me turn off this volume for a second. This big clear 5-wave impulse, 1, 2, 3, 4, 5. And after a 5-wave impulse, you're expecting a bigger correction. Now, let's look at how long this impulse took on SUI. So it took 35 days. So we're expecting the correction to be at least, let's grab our trend-based Fibonacci extinction, trend-based time, fib time, I should say. Okay, so the least amount of correction you want to see is to the 382. So we've already passed the 382, so the correction technically could be over, but the most common area is like around the 1-to-1 zone. So you have an impulse that lasts 35 days, then you generally see a 3-wave correction that lasts 35 around that time, and then you continue the bigger push to the upside. So as far as time goes, we are not quite to that 1-to-1 target yet, and we could see SUI continue to correct down over the next week or 2 weeks, allowing enough time for that correction and allowing for some of the targets to hit of the correction, which the most common targets on that correction, well, the most common is the golden pocket, which is at 243 to 237, 236. But that 0.5 is looking pretty nice there at 271. It could be in nice alignment with the bottom of our channel by the time we get down there. We did print the green dot on the daily. Money flow is still in the red. It does look like it's trying to cross up on the daily. If we go on to our 8-hour chart, 8 hour, we did print hidden bear divs just recently on NAMI here. So hidden bear divs means continuation down. So what that tells me is that this move that we're seeing in this kind of ascending channel does look like a corrective move. Money flow on the 8 hour starting to come out again. No bull divs on the 8 hour chart. If we go on to our 4 hour chart, 4 hour money flow is coming to the upside and even crossing into the green on NAMI. And we did get that nice green dot on the 4 hour on that liquidity grab. You can see that very clean liquidity grab. I gave you guys this as a potential long opportunity on Friday, on Thursday. Even if we were going to see a 5 wave, a bigger correction after the end of this impulse, we were expecting like our A wave to come down to the lows, a B wave to retrace up to the golden pocket, and then a C wave to potentially retrace uh, much lower. So let's look at now if that is, let me just do this, get rid of these guys real quick. Okay. If this is going to be the end of the A wave and we're going to push up in a B wave, we're going to be looking for a 3 wave corrective move. And most commonly, that 3 wave corrective move will come up to your golden pocket of the entire push down. So if we do that, turn on our golden pocket, you can see that golden pocket is coming in right around the point of control of our smaller upper range. Actually, let's just take this and let's use this whole range now. Okay, so point of control is coming in right around that golden pocket, but you can also see this white line right here at 370, pretty much $3.80, 379. That is our much larger range value area high, and we are back with inside that value area now. So let's zoom out onto the daily. And if we look at this larger upper range that SUI has been in, you can see that value area high of that range is coming in right around the point of control of our smaller range and the golden pocket retrace. So between 380 and 386 is a major area where we could expect a bigger rejection and a rollover to make new lows on SUI. And I will be looking for shorts up in that area if we do see confirmations to enter shorts. Bear divs on the chart, maybe some bearish CVD absorption, stuff like that. And I'm just going to put this there. Okay, so that is what we're looking at on SUI. You're still just ranging overall within this range. Let me go ahead and hide this. Still just ranging overall within this range. We did take out the range lows and chopping around, and you can see we are still below the value area low. Now, because we are below the value area low of the range that we've been in for about a month now, April to May, actually over a month now. We've been in this range for over a month. And now that we are below the value area low, after grabbing liquidity, you expect to see a small bounce. This bounce so far looks corrective. Well, if we come up to the channel midline, which is in confluence with our value area low, and we do reject from that area, we could continue down without even coming up to the golden pocket. So that is the very, very first area where I'll be looking for a TP on my long, first of all, from the SFP, but also a potential short opportunity would be in this area here as resistance. That is around 345 to 349. If we look at our Fibonacci pull from the highs of the range to our new lows that we just made, and we turn on our 382, our 382 is just a bit above that. So in a strong trend, you often reject from the 382. Okay, that is it for SUI. Did get the liquidity grab we were watching for. Next up, we're looking for a push down. Now, we do still have a naked weekly point of control at 298. And I believe we're going to have that new naked weekly point of control. Let's mark that out. Yeah, we do have a new naked weekly point of control at 363.5. And of course, we have our naked weekly point of control that's up in our box of resistance where the golden pocket. So this is going to be golden pocket. All that resistance is within that area. Macro value area high is a little bit lower, but because it's a macro, we can see a little bit of some wickage past it. Okay, weekly chart here. Let's go on to the weekly chart and let's look at Okay, no new weekly levels on the chart. If we look at our monthly levels, we do have a new confirmed monthly resistance above us. Let's go ahead and mark that out real quick. Monthly level at 350. And let's go to the daily. Okay, yeah, that monthly level's right on top of that 382 and right around the channel midline and the value area low. So that's definitely going to be our first area to reject from. This, I'm just going to pull it up here. Okay, this is going to be 382 monthly value area low. All right. Now, since we have grabbed our liquidity of the lows of this range, if we start to break this range down again, we could see a very, very quick flush down because there is not a lot of structure in this impulse, in this part of the wave 3 impulse up. And if there's not a lot of structure in there, we could fast move up, could mean fast move down to that golden pocket. Now, there is absolutely going to be some fair value gaps within there. Let's go ahead and zoom in on to like the 4-hour chart here. And let's look at some fair value gaps. We do have some fair value gaps in here. But I would say the biggest level is going to be that golden pocket. Okay, yeah, nice fair value gap here. 260-ish, 266 to 255, 253. Okay, and our golden pocket, yeah, golden pocket's going to be right around where those fair value gaps start. But that's where the next major level I'd be looking at, golden pocket and that 0.5. So if we turn on, because this is on non-log scale, yeah, non-log scale, we turn on the 0.5. So 0.5 is coming in right around that naked weekly point of control at 298. Now, time-wise, it would have been a lot nicer if we would have came down on that Friday and hit that naked weekly point of control in the bottom of the channel, grabbing that liquidity and pushing up. But we did not see that. So we still do have that naked weekly point of control that's right around that 0.5 below us. Could act as a level of support, and we could get the SFP of Friday's lows into that naked weekly point of control. But honestly, if we reject from this first purple box of resistance, I do think we're going to come a lot lower. Okay, that's about it for SUI. Now on to XRP. XRP, guys, the last time I made a video on XRP and on Friday, I talked about this 207 level, like with extreme conviction that if we did get down there, that would be not only a long opportunity for me, but a potential spot buy opportunity on XRP. Because if we zoom out on XRP and look at since December, since Christmas, we have been ranging in an upper range after a giant impulse. And this 6-month range that we've been in now, officially 6-month range, does look more corrective to me than an impulse to the downside. And so after seeing that giant impulse, we've been correcting for 6 months sideways on XRP, and we have been waiting. We did reject from the value area high of the range. We lost the point of control, back tested a couple times, couldn't reclaim it. So what did we expect? We expected that rotation down to the value area low. Well, over the weekend, we finally got down there. And a couple people asked me, one guy asked me my comments on my videos. He said he actually longed 240, which was the point of control, which, not the best area to long. It's your fair value for the asset. But he did say his, 211, 210, 211 was the area where he could potentially get liquidated. And I did have to say, we do have a higher probability of working down to that 208, 207 area and hitting the value area low. And we have finally come down into that box of support where we have a monthly level, a weekly level, the value area low. So let's go ahead and turn on our not naked weekly. Where am I looking? Monthly levels. We hit the monthly at 2088. And if we turn on our weekly, we hit our weekly as well. So we have finally hit those levels. Now, also on what was that day? Thursday, we hit into our box here where I did say that we would at least get some reaction that first box. If we zoom in here onto the 1 hour chart, you can see we hit into our box, we hit our weekly, we got a nice push up here. And that was a scalp trade that me and a couple other people in the Discord took. But once we started rejecting from our prior lows here, that was your signal to kind of take some profit there on that scalp long. And then I did say overall that this would not hold, and that if we do come down there, we would eventually work our way down to the real support level. So we did do exactly that. I'm going to go ahead and delete this box now. Oh, what did I just delete? Okay, that we can delete too. So let's delete this box, and I'll delete this weekly as well because that's been tapped. Also, we can go ahead and delete. I'm going to leave the monthly on for now. I'm going to leave them both on for now because there's still potential we could come down just a little bit lower to actually touch the value area low, which we front ran. But this also, we are seeing a bit nice push up so far from our value area low, which I did long, by the way. I longed the weekly touch, the exact touch of the weekly at 2077. And we are pushing up pretty nicely here. You can see money flow on the 4 hours curving nicely to the upside. On NAMI, we had money flow curving nicely to the upside, but we also were seeing those 4 hour bull divs, lower lows on the price action, higher lows on the momentum waves, and even on, I guess, no, market cipher B, no bull divs, but we knew we were coming up to a major level of support because over the last 6 months, the fair value for XRP has been within this range. We rejected from the overvalued area that and lost our fair value. So that means we were going to work our way down to the undervalued to see if the market was willing to buy at the undervalued price of XRP. Well, we are getting that reaction so far, and there is a potential that we could work our way all the way up to the top of the channel again, the weekly level, the point of control, and our anchored VWAP from the all-time highs there. So if we just actually now pull a Fibonacci from our highs that we rejected from down to our lows, and we turn on that golden pocket, you can see that golden pocket is coming in right around that weekly level, right around that point of control. So our first major area of resistance here on XRP is going to be this box here between 241 and 245. And this could be an area where we do see a major rejection and continuation to break the bigger range to the downside. But I would say that is not the highest probability. The highest probability for XRP is to break out to the upside and to really see a push up to, this 302 level that we have above us. So this box is going to be our POC, GP. Okay, so we've got a weekly level there, an anchored VWAP, a golden pocket, a point of control. And I do believe the top of the channel is also there. Okay, naked weekly POC ahead of that, though, at 229. And we do have a naked monthly point of control at 234. Okay, we do have some naked POCs before that, but I still do think this purple box is the big box we need to be paying attention to. If we go, actually, let's just turn this off for a second. Let's zoom out onto the monthly chart, and let's see on the monthly chart. Okay, no new monthly levels. Let's go on to the weekly chart. We do have that weekly we marked out already. Okay, and daily chart here. Yeah, we do have a daily. Okay, so this daily was barely front ran. Here you can see we actually didn't touch it the next day, so it's still naked at 231.5, 231.5. That is going to be near our naked weekly point of control at 234. Let me see if I actually have that. Okay, I already had that on the chart. So 231 to 234 is a slight resistance, but honestly, I think we're going to work our way up to this purple box. And we'll have to see what it looks like once we get up there. If we could, at least TP on the long from 207 up there and potentially look for a short. Now, I'm not even looking for a full TP up here because I'm looking for the potentially XRP to break up all the way to 302 up here. Weekly value area low of our upper range, 786, naked daily point of control, naked weekly point of control, and a swing failure pattern of these highs. That is it for XRP. Now let's go on lastly to Link. Chainlink did hit into our support box. If we look here on Chainlink, let me just zoom into the 4-hour chart. So Chainlink had been in this descending channel for quite a while. We were talking about primarily in my videos the pitchfork band, this green line that comes through here. And for 2 weeks, it was acting as resistance. We made a higher low, broke above it, and then we were holding it as support. But then you can see on Thursday, we broke it to the downside with some volume. And because we broke it to the downside with some volume, we expected to come at least to the lows of the pitchfork band. And I know this chart is looking messy here. Let me go ahead and just hide some things real quickly. Let's go ahead and hide this. And we did come to the lows of the pitchfork band, which was also the point of control and the anchored VWAP from the lows. We did get a nice bounce, but we overall continued down, breaking down. And what happened now, which is very, very important, is we not only are below our pitchfork band that was, trying to flip to support, but we are below it, but we are also below the anchored VWAP and the point of control of this range. So this range here, let me go ahead and pull that. This range is a much larger range. If we zoom out onto the daily time frame, you can see that this range goes back all the way to November of 2023. It's this upper price action here. And now that we are losing the point of control of that range, if we come up for a bearish backtest like we are in the process of pretty much right now, and we reject, we do expect to at least come down to our golden pocket between 13.1 and 12.8, but we could come down all the way down to the value area low around $12. Now, I would say it does look like we are going to push down to this golden pocket. This impulse on the daily could have been in it a 1, 2, 3, 4, 5, and then you're going to be looking for, 1, 2, 1, 2, 3, so 4, 5, 4, 5. We could look for that double 1, 2 here in an A wave, push up in a B wave, and then you'd be looking for a C down to value area low. That's going to take, some months to play out, but that is what we could be looking for. Overall, making a higher low at the value area low and at the bottom of the pitchfork. So if we do make a bigger, let me explain this a little bit better. So if we are looking after this 5-wave impulse finished on the daily time frame, we're going to be looking for a bigger ABC correction. Now, with this ABC correction, we are in a double 1-2 impulse to the downside, it looks like right now. A wave is not finished, it looks like, to the downside, which could potentially finish at this golden pocket. Grabbing internal liquidity, by the way. If we do finish our A wave here, we would expect to retrace potentially back up to the top of the band, rejection, and then our C wave would be another 5-wave impulse down to our value area low that's going to be right in alignment with the bottom of our pitchfork, and our 786 is going to be close by. So that is an area of support that I would definitely be interested in buying a overall higher low, like this being a high, higher low, higher high. And so this area here at like $12 is going to be a potential swing long area based off Elliott structure, depending on how we crash down. If we crash down in this bigger 3-wave daily move. But very, very locally, Chainlink is below the point of control of the range. Let's zoom out a bit. Below the point of control of the range, which you can see is also the anchored VWAP from our lows, from our $10 lows. So now that's going to be acting as resistance. We're coming up to it right about now. And if we do reject at 14.3, then I do expect that move down to the golden pocket at 13.1 to 12.85. If we reclaim it and start to reclaim back within this pitchfork band, then let's see, is there a way we could count this here? 1, 2, 3. 1, 2, 3. Yeah, we could look at this as a very complex WXY correction, a series of 3-way moves. 1, 2, 3 here, Then you got your small 3-wave here, and then your last Y wave is generally a bigger 3-wave corrective move there. And so, but let's look at the volume here. Yeah, volume does not look healthy so far on this push up. You can see volume is decreasing overall. Yeah, one nice spike there, but we are pushing up in this ascending channel. I will throw that on the chart in just a second. Let me get that volume off. Nice ascending channel here. The top of the channel is going to be around that test, and it could be, if you want to be a pattern trader, a bear flag. Your pull, your flag, breakdown. So I am potentially looking for 14.3 to be a short position for Chainlink. Now, money flow looks pretty good on the 3-hour on both NAMI and Market Cipher B. It's crossing up. It's coming up into the green here. Not quite crossed over yet. On the 1-hour chart, it has crossed over into the green on both Market Cipher B and NAMI, but you can see we are printing some local hidden bear divs here. And it's just a major resistance that we're coming up into. 15-minute chart. Yeah, 15-minute chart. Money flow starting to top out here. I would say for Chainlink, if you're a bull on Chainlink, you need to get above 14.3. You need to get above 14.3 and flip it to support. If not, I do think we're coming down lower, $13 to 12.8. And that is about it, guys. If you got anything out of this video, please hit the like button. Please subscribe to the channel. And I will see you guys tomorrow.